Yeah. No, but the 46 today.
What become the police?
Yeah, but it's 46.
Come on, man.
It's not the point. So it's a mental battle.
Sake Brody. Hello. Is anybody logged on here? Can you hear me? Yeah. Can you? And now? Nothing. Yeah. Okay. All right. We got to go in here again. Sorry, guys. All right. So last night's session on the S&P, you could see we had a bit of a blip in the middle of the session. That came in the middle there where in the middle of the FOMC minutes, and there was a bit of maybe a hawkish tone for a little bit, so the market started to swerve pretty quickly, and very soon they realized that they're never going to change policy, so we pushed up to the highs and made another all-time closing high on the S&P 500. Interesting how we actually had a huge spike down at the very last candle of the day there in the NASDAQ, but nonetheless, we made new closing highs on all these indexes, and I think that, we didn't quite make a closing high on the S&P. We finished right below an all-time closing high, I think about 3 points. But the NASDAQ, new closing high. So markets continuing to sort of defy gravity, shake off the sell-off that we had a couple of weeks ago. And we did see some strengthening in bond yields yesterday, although mildly so. We continue to just really battle to get any sort of significant bounce in U.S. Treasuries at the moment. So we had Home Depot, Lowe's, all these guys over the last couple of days. You see Lowe's rallying yesterday again, just like Home Depot did the day before. Target also rising. A little bit of an earnings miss there with the expansion into Canada and that sort of thing. But bottom line is, they're still able to buy the earnings play at the moment. If you're looking at what happened in Asia, you can see we're weak across the board for the most part. Nikkei really was the kind of outlier there, and the reason for that is simply if you haven't been paying attention to it the last few sessions, the dollar strength across the board has been absolutely alarming. I mean, we haven't seen dollar strength like that in a hell of a long time. It's interesting because we're getting nothing out of U.S. bond yields at the moment. I think it's more or less because the rest of the world is continuing to show us weakness while the U.S. is continuing to show strength. And we see that in things like the China PMI numbers this morning, the HSBC PMI numbers that came in significantly weaker than expected. We saw more downside out of the property stocks there. They're continuing to take a beating. We saw some of the exporters in Japan that rose, obviously because of the weaker yen and that sort of thing. But the rest of the market's really pretty much under pressure in Asia on the back of those HSBC numbers. All right, interesting little chart here. Not sure if it's 100% relevant at the moment, but interesting nonetheless. If you take the Dow priced in gold, we're still quite a way off the top. So I heard an analyst making a bullish call based on this the other day, which is the most ridiculous thing I've ever heard in my life, but interesting to have a look at regardless. All right, a bunch of earnings out this morning here locally. We had Exxaro out with headline earnings per share at 7.93, came in a little bit better than the trading statement. That was at 7.85, and much better than the previous guidance out of Bloomberg Consensus. You can see there, divvy per share beat by about 10 cents. Maybe a little bit of strength out of Exxaro this morning. Grindrod also came in and beat on earnings per share, a miss on the divvy per share, but it's a very small beat in the headline earnings per share. So we'll have to see how it plays out today. It's quite a big miss in the divvy there. I'm not 100% sure why they're not coming through closer to the consensus. And then Goldfields was also out this morning with a miss on earnings per share, but a beat on revenue. Their all-in sustaining costs look like they managed that pretty well. I think that fell actually a scrap, and production was down about 2% roughly. So, but divvy per share came in slightly better. So I think all in all, maybe kind of a bit in line here today on Goldfields. Don't quote me on that. We'll have to see how that plays out. There'll be a lot of other factors that guys will be looking at today. All right, if we look at market data, a ton of stuff going on today. We had the PMI numbers across the region pretty much, starting in Asia, Japan looking better than expected. Then we had the Chinese numbers, as we mentioned before, a touch softer. German numbers are going to be important to look at, like we've talked about in the last couple of weeks. The numbers out of Europe have been turning increasingly soft, especially relative to Germany, which is obviously very dependent on a lot of exports and things like that. That's going to be a big one to watch at 9:30. We've got the entire Eurozone PMI numbers that are coming out at 10. Also be important. We've got retail sales ex-auto for the UK at 10:30. And then we get into the meat of things in the States. A big day for data in the States. We've got initial jobless claims. We've got PMI. We've got Bloomberg Consumer Comfort, Philly Fed, existing home sales consumer confidence, and the Eurozone later. And then we've got leading index numbers in the States. So a hell of a lot of data out today. Actually, some really important stuff coming today. So keep that in mind around some of these data points today. We could possibly see some big spikes either way in the equity markets and futures markets on the back of that. So just jot down some of those times and keep them in mind. All right, let's get into the maps. Just talking about what we were mentioning earlier and some of these and the dollar strength. So I've actually got this chart up already. We'll have a quick look at this. You can see here we've really had a bit of a breakout here from what's been ridiculously low volatility. This has been the lowest volatility in something like 15 years over the last three or 4 months in or maybe it was 6 months that I read in the U.S. dollar yen. You can see that we finally, over the last couple sessions, we've had a pop out of this little narrowing wedge that we've been in for literally 8 months, and it got to the point where we hadn't had a move outside a 1% band in the U.S. dollar yen for like 4 months, which is just absolutely unheard of. The lack of volatility is ridiculous. The complacency is through the roof, and I think this is going to be something to watch going forward. Bottom line is we've broken out here to the upside here, and to the upside for the dollar, and probably coming up looking to test multi-year highs closer to 105 on the U.S. dollar yen. If you look at the euro dollar, you can see as well huge strength here. We'll actually back it out and look at a 5-year chart so you can get a little bit better picture. You can really see there we've just popped up through trend. We've popped down below trend resistance here. This is a euro chart, so we're talking about dollar strength, and you can see significant downside potentially here out of the euro. No real major support levels in terms of horizontal support coming in anytime soon. Maybe potentially a little bit of support down here around 129 or something along those lines, but still maybe just reaching for straws here. I think this thing can really go for a extended period of time. All right, let's get into some of the single stock stuff. We'll look at Tiger Brands. You can see this. You would have seen this one on Twitter yesterday. You can see here this 304 level is quite big. We came back up. We managed to close at about 304. and 5 cents. But bottom line is here, there's major, call it 308, 303.80, 304, somewhere in that neighborhood. There's definitely been some support here over the past kind of week and a half. If we can drop that level, then I think we can potentially drop all the way down and test the kind of bottom end of this range, which has been about 297 really in any sort of volume. On Tiger Brands. We get below that, then things can really get hairy. I think we can really come back and probably pull back another $15 from below those levels. Could be interesting to watch. They're the biggest supplier to ShopRite, if I'm not mistaken. Shopee's had really soft numbers the other day, so that's an interesting one to have a look at. All right, if we have a look at FirstRand here. We talked about this chart yesterday. I just wanted to show it again. Very symmetrical here. You can see the lines line up absolutely perfectly. In fact, on our gap fill that we had down yesterday on the open, or 2 days ago on the open, sorry, we pushed up. Spent some time ago, testing at that level. Or sorry, this is yesterday, in fact, and then really just reversed hard down to below 42.5. Came back up, everything recovered a little bit. Futures gained about 500 points off their lows from the intraday session yesterday. So the fact that this thing didn't bounce harder is actually kind of a reasonable result, I think. But bottom line is we're looking at a target that's going to take us down really close to the 40 Rand level on FirstRand here. So the height of this channel down to the bottom, probably down to around 40.30 or something around those levels in FirstRand. All right, we'll look at CFR also on the 30 minutes, and you can see here a lot of inverse head and shoulders, a lot of head and shoulder patterns kind of setting up. You can see this. We had a nice little inverse head and shoulder here. The target would be about 105, I believe, if I'm not mistaken, about 104.50 maybe, 104.80, 105, somewhere in that neighborhood. What's interesting here is this thing's making it inverse head and shoulder, but then here, maybe on the more recent chart, we've also actually got a little mini head and shoulder going on here. So this is important to watch. This level's going to be big. If we drop 102.10, somewhere in there, then I think you can negate this head and shoulder pattern. We could be at risk potentially, especially if we drop that trend line. Yeah, so maybe you call it 102 today, something like that. If we drop 102, then you can negate this chart. If we can manage to hold above support here at call it 102.5, then I think that we can probably move up, over the next couple sessions closer to 105. We got a little bit of Rand weakness today, so it'll probably help us a bit. All right, so let's look at BGA. BGA, you can see here also making another attempt down here at the 165. It's a touch below 165, in fact. Maybe 164.5, somewhere around those levels. But you can see there's definite support there somewhere. I'd call it 164.5, and we got that down there, and we actually spent the whole day trading there. At the end of the day, we bounced a touch into the close to close at 165. This one actually kind of was one of the weaker of the lot. I think if we drop here, same sort of thing. We've been really consolidating heavily up in this level here, and I think we can drop quickly. Maybe as much as 7 or 8 Rand, probably take us down to closer to the 157 level. So watch this closely. A lot of these banks are starting to show some weakness. Obviously, the sentiments may be turning on them a little bit. The earnings have turned a bit on it, and I think just the South African economy in terms of the earnings space has started to look a hell of a lot weaker over the last few sessions, with a lot of the companies starting to report weaker than expected numbers. And the last one we're going to look at today is Truworths. Truworths we looked at yesterday. We talked about this thing coming down to test the closing lows on the year. We took the closing lows out yesterday, only marginally. The closing lows before were just above 66. We closed at 65.70 last night. We've got earnings out of Truworths today. The interesting thing is here, if you look at the WIC, the wicks really line up perfectly. So, imagine we had decent earnings today out of Truworths. This thing will end up looking like a hell of a double bottom. So just watch it. I mean, this thing can obviously, we can drop below 65 here. It could continue to get pummeled. Watch for a buyback potentially if they put in a reasonable buyback in place. Specifically, they could give us a bounce potentially off of these lows, and at least back up somewhere, a little bit north of what we've seen over the last couple sessions, and maybe gaining some ground on some of its competitors if we see some reasonable earnings out of that today. That's it for today, guys. Good luck out there.